Good morning and welcome to the free DecisionPoint trading room with Carl Swenlin and Erin Swenlin. We are here to let you know what we're seeing in the market starting off the week, give you an idea of what some of our indicators have been telling us to expect during this week. And we should have lots of interesting things to talk about, it looks like, on a pretty crazy market day. How's everything going, Dad?
Doing fairly well.
Fairly well.
Broke a tooth this morning, so not tip-top.
Could be better, but oh well. Okay, let's go ahead. The Q&A box is going to be for you. We also have the chat room open. The Q&A box is for us. So you need to send your questions and symbol requests to us through the Q&A box. And then the chat room is for you to talk amongst yourselves. And I have a subscriber here who's going to be a moderator for the chat rooms now. His name is Fred. So say hello to Fred, let everybody know where you're from, and get involved in the room. Okay, Dad, passing it to you. What's going on in the market?
Okay, let me share here. First of all, I want to start out with, let's call it Potpourri for a minute, for the time being. Mm-hmm. You know, I get, I see these tips, and throw away stocks that people recommend, and I just really wanted to demonstrate how I check these out if they sound the least bit interesting, and one I came in at the end of a show, and the guy says, well, people don't like what the market's doing. They should buy PXD because it pays an 11% dividend. So 11% dividend always perks up my interest. So here's the chart, and I don't see 11% going here. It's more what we have here is a one times $7.38 dividend, which is fantastic. But what it looks like is we're getting, we have two in a row, $1.10. So that works out to about a 2% dividend if that continues for a year. Nobody's getting this one anymore. So that's what I would go in there looking for if I were going to buy this stock, which I'm not. And again, none of these are recommendations. They're just examples. Okay, AMT. What was that one? Oh, yes.
I have one for you.
Huh?
I have one for you. It says it has a 54% dividend.
Okay.
How about PBR? Let's see what you see with that.
PBR. Okay.
Yes.
Yes. I don't get it. I'd have to look into this more closely, but look, there's nothing consistent about the dividends that are paid. So maybe this is a good buy and maybe not, but that's pretty extraordinary for sure. And let's go to the next one I was going to do, AMT. This one I found on Facebook Reels, and there was this short reel about China and the U.S. are going to be piling into the continent of Africa because of their natural resources, et cetera, et cetera. And this company is one you should look at, very professional presentation. But again, I know nothing about this company. I don't recommend it. Or I don't even say don't go into it necessarily. It just, I don't know anything about it, but I'm looking at the chart. Well, it's not doing too well on the daily chart. Let's look at the weekly. I never consider anything without first looking at the weekly chart. And what we have here, this is real estate, real estate, REIT. That doesn't sound like an Africa play, does it? But
No.
there you go. Rounded top, don't like it. It's now the weekly PMO is rising, and you have a crossover buy. And of course, it has been rallying, but you still have to worry about this rounded top. So I'm not so sure how long this is going to go. And one left, one guy was recommending the banking industry. So I got the regional banking ETF, KRE, and here's the weekly chart. Doesn't look good. I mean, you got a rally going on here at, since December, but rounded top is not particularly appealing to me.
Yeah, it's very head and shouldery.
It's head and shoulder, really, and with the neckline running around through there. Okay, enough of the silliness, unless you have another one.
No, that was the one that actually ran into last week. And with that big, and one of my subscribers, he did go back and check it. And based on what it was, one of those, large dividends drops kind of thing. And that's what went, probably caused it.
You'd have to know a lot more about a company that was doing that kind of dropping of that different dividends in each quarter. Okay, looking at the market, SPY is breaking out of this triangle formation. Don't know what kind of volume we're going to get today. We've got a bottom beneath a bottom. I should say we've got a bottom above a bottom, and we have a top. We need another top above this top. So that would set us up with a intermediate term rising trend. Looking at the new highs, new lows. Now this is just for the S&P 500 stocks, and you notice we had a declining tops going as the index was rising higher price. And that's kind of led us into this steep drop. Now, on Friday, we had an expansion of new lows, nothing to be concerned about, but with us, looks like we're going to could be exceeding these highs today. We certainly, at the close, we could exceed these two closes here. So we should expect to see a nice expansion of new highs. When you're diverging like this with new highs, bad. When your new lows are contracting, that's good. Okay, going into our bias assessment, we've got Silver Cross Index. This is a percentage of stocks in the S&P 500 with the 20 EMA above the 50 EMA. That's called a Silver Cross. When the 20 goes below the 50, it's a dark cross. With the golden cross, that's 50 above the 200, and when it goes down, it's a death cross. That's a traditional name before I got in the market. So right now, 71% of stocks in the S&P 500 have 20 above the 50. That's very encouraging if you're looking for a bullish outcome. And we got 56% of stocks with a 50 above the 200. Again, that's really encouraging. I call anything above 50, and this is just a rule of thumb, is just would we consider bull market condition. We haven't reached the bull market advance yet, and I think best we did was about 17% on this run. So we've got a ways to go before we can say it's officially in a bull market. We know the Dow has made bull market territory a couple of weeks ago, but all the rest of the indexes are still waiting to make that. anyway, this is I consider these being certainly some of the best and possibly the best breadth indicators that there are around, because they're like 3D. You get a real sense of what's going on with the breadth and participation. The stocks above the 200, 50, and 20 EMAs, they're all doing now. I would say fair. Stocks above 50 is 70%. Nothing spectacular, but certainly decent. And well, they did get overbought, and we had that pullback. Okay. Our short-term indicators. This is the Swenlin trading oscillator for breadth and for volume. And they were getting in the negative territory on Friday. I suspect that will pop up today. But they did get overbought, and we got that pullback. So watch again for them to get overbought. Intermediate term indicators, we've got the IT breadth momentum and IT volume momentum indicators, and they have gotten somewhat overbought, and they are headed down right now, but that's as of Friday. That could turn around today, but these move more slowly, of course, than the short-term indicators do. Let's see what we have with them both together. Overbought and pullback for the short term, and then here we are. Yeah, actually, they ticked up on Friday, the intermediate
Yes,
term.
I was just going to mention that, but you pulled that chart up, so I figured you'd know.
They pulled it up. Okie doke. Let's look at the four, starting with the dollar. The dollar index is in a decline, and right now it's consolidating. This would be good for gold, and it is. Notice gold is in a rising wedge and has popped down out of that wedge, which is what we would expect. Possibly a pullback to this area of support. And actually, I probably should move that line up to right here for the more short term, or put another line in there. But so far, gold is behaving well. Now, I have actually developed a new indicator, a relative strength indicator for gold versus the dollar. I think it's legitimate. I think it's valid. But what gold and the dollar are conversely, related. When the dollar goes up, all things being equal, the gold will go down the same percentage. So you can't do a relative strength on those two, except I came up with this idea using minus UUP versus gold. And we can see now we have a relative strength. We're saying gold is stronger than the dollar, which means it's got its own thing going. It's got internal strength that is unrelated to what the dollar is doing. Okay, the USO, which is crude oil, we have a rising trend in short term here. Notice today the 20 has crossed up through the 50, and if it stays that way up to the close, we'll have a new buy signal, intermediate term trend model buy signal on gold.
Oil, yeah.
Treasuries in a triangle, it looks, this is this flattest one, and it's probably the one that will fail. So we could see this going higher. But right now it's in a, let's say, consolidation, continuation pattern. Bitcoin, I was not expecting this, but there you go. I think it's not likely to reach all-time highs again, but certainly right now it's got it's got a rally going on, a pretty good one, and we can see the various levels of resistance it's got to get through, but I don't think it's ever getting back here. I could be wrong, but I'm not having any money in it. Okay, treasuries, treasury 10-year yield. It's in a rising trend, but it's essentially, longer term, but intermediate. In the shorter term, it's moving sideways to slightly down. And that's actually, if I draw the line right through, that's a falling wedge, which we expect to go resolve to the upside. Looking at the yield, this is the yield array as of Friday. And notice this dotted lines, those are the 1 month and 3 month treasuries. They're up in the atmosphere here with the 1 year. The 1 year is up there too. So they're the highest, and that's what you call an inversion, folks.
Big time.
Boy, Apple finally broke out of this declining trend line here. So this speaks well for big tech. And let's just go through some of the big techs here. Amazon not doing well, down 57%. This is rallying. Let's see, it's a 20% rally so far. So that's good news, but it's doing much worse than the other big tech stocks. Google rallying up. It's been up to 22% off of this low, and looks like we have a higher low, so there's potential for a new rising trend to be established there. Native platforms up 64% off of the low, the bear market low. Microsoft has been up almost 24% off of its bear market low and is rallying again, possibly to establish a new rising trend for that stock. Netflix is really a champion here, 119% off of its bear market low. Quite a ways to go to capture what it's lost. NVIDIA, it's actually, you could say you have a top above the top, bottom above the bottom. So right at this moment, we have established a new rising trend for NVIDIA. That would be an intermediate term trend. Tesla, up 40% from its lows. Today, I'll just hit this one sector, technology, XLK. Looks like we're going to have a 20 moving above the 50, which is a buy signal. Silver cross buy signal. So that's good news for technology.
Yeah, it's actually above its 200-day EMA right now trading. So that's pretty positive too.
Yeah, it is. Okay. Yeah. All right. I think that'll do it for me.
All right.
Maybe we should look at if there are any questions.
There was a question. I happened to be in the chat room, which I generally am not, so people don't ask questions in there, but I happened to see it. And what they asked is, at what point using the charts can you consider us in a bull market? When would we lose the bear market?
Okay, essentially, the very basic would be, let me get the right thing here, would be to, this is the bear market low over here. We want to rise 20% above that. And that would be the official entry into the bull market if it gets above that. So what have we got? 415 roughly.
So would you consider that a bull market within a bear market context or backdrop? Or would that be a switch over from what we've been watching going on in 2022, the bear market of 2022, if you will?
Yeah, I don't think the bear market is over. So I'm going to consider this a cyclical bull market if it does manage to get up that high. But again, if it gets up that high, maybe I'll be reconsidering my stance there too. But that's the basic way of defining a bull market.
All right. And let's see. Has the NASDAQ and S&P 500 turned up? I would say, Andrew, that's a big yes. Oh, how do you show the dividends on a price chart? I know you can show that really quickly.
Yes, I'll do it on this one since I got it right here. Under overlays, you pick events, and that shows all the dividends and stock splits. And there you go. Notice the dividend has increased since the last one here. But that's how we get them.
I got one more for you. What measures can indicate whether a move is driven by short covering or by normal buying interest? How do we determine if it's a short covering rally versus just a rally?
Yeah, I'm glad that was brought up. This I consider right now being a short covering rally, but I don't know of any metric that we can use to decide whether it's short covering. Maybe the put call ratio charts, but I just consider when you see this breakdown here, I think there was a lot of short covering started again. A lot of shorts were cleared on this, but when this came down, I think we got a lot of shorts piled in on this. It's clearing them out again. I don't think we have a long way to go with short covering.
Mm-hmm. Yeah. And volume, right? I mean, if it's a really high volume day, maybe, I don't know. It's usually kind of a judgment call, David.
Right. I mean, when you see these huge moves coming off of a low, you've got to assume that it's short coming first, and then if buying, actual pure buying comes in behind that, then you can consider that maybe we've got something that's going to last going.
Excellent. Very good question. Thank you for that. I think that kind of covers it, but I'll let you go take a look and see what you think about if there are any other things you wanted to answer later. But I'm going to share the screen. We're going to get started on our sector and industry group overview, and then we will look at some of your simple requests at that point. But I have to say, after Friday, when I was looking at the sectors and price action, as well as, what's going on with relative strength or the scooter, when I was looking at this chart, so I have the 20, 50, 200-day EMAs, I have the PMO, of course, our price momentum oscillator, and then the StockCharts technical rank. And you should read a little bit more about that online. But basically, the StockCharts technical rank gives you an idea of how this stock stacks up relatively against its brethren. So in this case, the brethren of the sectors would be ETFs. So amongst all ETFs, how do they stack up as far as short, intermediate, and long-term trending condition? With an emphasis on the intermediate and longer term. 80% of the calculation is intermediate to long term. So it's a really great way to give a little bit of backdrop just to see, okay, well, how do these ETFs shake up against just all of the ETFs? So you want to find those with the higher scooters or scooters that are rising. The high scooters tell you you've got something that's good, it's a winner, and the idea would be a winner keeps on winning. But I'm always looking for new momentum. So these are the kind of things I like to see on a scooter, a nice big pop to the upside. You can see that also on XLK, breakout above the 200. We don't have the breakout above the 200 yet on XLC, but you can see that PMO accelerating higher. We got the silver cross a while ago on that 20 and 50. And just really the breakout above this area of overhead resistance, I think on XLC really made it kind of the winner of going into this week. I thought that XLK and XLC looked really good, which is something to consider because these are really the most aggressive sectors in the S&P. Your consumer discretionary, comm services, and technology. And when money is rotating into aggressive growth sectors, that usually is good for the market. That means people are feeling pretty good about the market, and that's where they're going to put their money. And one of the things I also noticed is that those defensive sectors, and I'm just going to pop over here and make sure that this is up to date.
Let me interject here that
yes,
the PMO is also an excellent tool for measuring strength of one stock or index or whatever against another, because it's a ratio calculation, and so they can be viewed equally.
And yeah, so you can actually compare PMO values. So if we're going over here, let's see, where did I leave my, there it is.
And also there was a question, what is the scooter, the SCTR, that's StockCharts technical rank, right?
Yes.
There you go.
And like I said, I highly recommend you read about it. John Murphy was one of the ones who came up with the calculations for the StockCharts technical rank. So it's a really great tool. So, and yes, the PMO, you can actually compare the values amongst each other. So
yes,
that's what's kind of nice. So 1.92 sitting here on XLC is certainly, let's see, I got to get all my stuff out of the way here. 1.92, but you can compare it to all of the other ones, and that is the highest. So even though we're liking what's going on with the XLK, it only has 0.57 PMO, whereas we have 1.92 on XLC. So excellent point. And then again, this really nice improvement on the StockCharts technical rank. So this looks like a lot of new momentum to me. That breakout was pretty impressive. And let me show you what I mean. So here is the line of resistance that it overcame. Now we say that when we tell how strong a level of resistance or support is, or even a trend line, we determine how strong it is based on how many touches happen to land on that particular support, resistance, or trend line. And you can see we have 1, 2, 3, 4, 5, 6, 7, 8 different touches, if you will, on this overhead resistance line, prior overhead resistance. So a breakthrough here, I think, is really important to see here on comm services. Now, you looked, I believe, at Netflix. I know you looked at Google. Disney is also one that's in XLC, I believe, here. Disney was looking really good. And you can see really nice breakout. It's headed up. It looks very much like the sector itself, but you have a nice little flag formation here, possible breakout. We've got everything looking pretty good here. Even relative strength against the group is starting to improve here for Disney. Big problem, though, would be overbought. It's very overbought as far as the RSI is concerned. But anyway, let's get back to the sectors. I started to just get right off track here. So comm services looking great. below the surface as well. You can see the improvement in participation of stocks above their 20, 50, and 200. Those are all these two are well above 50%. So that gives you a nice short-term, intermediate-term bullish bias for comm services. So I'm liking the look of that one. And we wanted to talk about technology. And there's that breakout. I won't go too far into the technology chart as far as price action. Carl covered that. But you can see under the surface, again, some improvement here in participation. I have to say the Silver Cross Index looks a little bit wishy-washy here, as it looks like it wants to turn back over. Although we have so many stocks above their 20 and 50, that condition will probably change, because the more you have above the 20 and 50, the more likely they're going to get yanked up and have those positive crossovers like XLK just did. And relative strength looking fabulous here for XLK against the SPY. Now, I was talking about the defensive sectors, and you can just look at these charts very quickly and see that we're just not getting the kind of price action we want out of them, especially when the market's doing pretty well. Utilities are holding a level of short-term support right now, back above the 200. But you can see relative strength just dropping off the chart there. Relative strength for the other sector, defensive sectors, consumer staples. Look at the relative strength here. It's definitely not performing as well as the market. So again, defensive sectors are starting to look weak against the overall market. Here's healthcare, also considered a defensive sector. So money is going into the aggressive areas, and that tells us that people are interested in being involved in the market. And it tells me that while we might have some short covering going on here in the overall market, it's not looking that bad under the surface, when you have these aggressive and growth sectors doing so well. All right, real quick look at some of those industry groups within technology and within comm services. So I'm going to the handy dandy industry summary here on StockCharts. And if you want to set up your own chart style over here, all you have to do is set up your chart style. I'll just poke in here so you can see. So just set up what you want. So in this case, my industry summary, name it industry summary. So you come up with what you want, and then you save it as industry summary. And then that particular chart is what you're going to see when you go to the industry summary, which is again, right over here. All right. So comm services, we've already talked about the chart, but let's look at the different industry groups. So when I was going through it on Friday, I found that broadcasting and entertainment, internet were the two big ones here that looked good. The rest are kind of not interesting. Media agencies, mostly sideways. Fixed line, kind of mostly sideways. Publishing, again, mostly sideways. So we know that what's carrying this sector are these two industry groups. So if I'm looking for an investment and I see comm services looking strong, I need to go and find those groups where those strength areas lie. And in this case, it would be broadcasting, entertainment, and internet. I showed you Disney, internet. Of course, Netflix is looking very, very strong in that area, and as well as Google. I mean, right now they're getting a lot of attention. I think what we really need to pay attention to, guys, is if we start to see that rotation shift. The minute we start to see rotation start shifting out of those aggressive groups, it's time to really be careful. And here is technology. Renewable energy has been, it had a really nice run and then a really deep pullback, but it does look like it's getting ready to head up higher. Renewable energy is kind of it's like a biotech, in my opinion. They're very volatile. They can be very nerve-wracking to be involved in. So if you like renewable energy, I know that the ETF for it is called TAN, T-A-N. It's one way to play that space without being, really vulnerable to the volatility that usually accompanies those stocks. So electronic equipment, again, not really exciting. Yes, it's a great breakout, but I want the breakout to already have occurred. This is a nice breakout. You can see here's that support level that was overhead resistance. Nice big move above the 50. So computer hardware looking pretty decent. I don't like telecom, just sideways. More sideways, computer services. Getting ready for the breakout, but we don't have it on electrical components. Semiconductors are breaking out. And of course, this is one of those exciting areas that most people, if they're going to technology, they're going to be looking at semiconductors and software. Software is certainly not looking as bullish as semiconductors, which are just about ready to break out. And we talked renewable energy. So you're looking in the technology space, semis looking pretty good here. Computer hardware looking good with the breakout above the 50. So it's good to know what sectors are strong, but you really want to know what industry groups are strong so that if you're getting involved in that sector that's showing this kind of strength, you want to make sure that you're in the group that is going to give you the best chance at finding the best stock. So if you were in here and you're like, well, I'm not really sure what computer hardware stocks there are. If you go here and it's within the industry summary, if you click right there, it's going to bring up all of the computer hardware stocks. You can then go and organize it by scooter, that StockCharts technical rank. It's going to bring the strong ones to the top. I prefer to look in the 60s, 70s, 80s in terms of scooter. I want to see them improving and I want to see that they have room to move higher. And so that's one of the things I like to look for. All right, I think that covers it. That leaves us about 22 minutes for symbol requests and any more questions.
The first one requested is XLY. Did you cover that adequately?
I don't know that I did. So let me go back and we'll look at that very quickly. Let's just click one and then I can get into it. And again, XLY, one of the aggressive sectors. If you say aggressive sector, that's one of the first that's going to come to mind. And you can see PMO is just now getting above the 0 line. We have this sort of cup with handle look, just like the market, with the nice little breakout coming off of the bounce from the 20-day EMA. When you look under the surface, it looks pretty good. I mean, I like it, but the reason it wasn't my, sector to really get excited about was because, while we're getting this improvement beneath the surface, it's not nearly as pronounced as it is for XLK and for XLC. And notice also the relative strength. It's it's not bad. It's moving sideways. But when we looked at XLC and XLK, we actually were seeing more internal relative strength building. So I still think this is a good area. You can see that the golden cross is rising strongly. We have a 75% reading on the silver cross index. So it still looks like a pretty solid sector. And I'm sure there's some great.
That's overbought.
Yes.
So both of the, certainly overbought for the 1 year period. And, things get worse and worse until they're as bad as they're going to get. And then they get better and better till they're good as they can get. Not necessarily quite as linear as that, but so it's getting up there to about as good as it has been this year.
Yep. There's your participation level that we're going to be watching. And we're getting back up there to that overbought area. RSI is still okay with where price is located, but we have to be really careful. It's going to be getting up there soon. All right, next up.
Okay, BMEA.
All righty. I've adjusted my chart default chart so it fills up a little bit more of the screen. Hopefully you're all finding that to be helpful. I'm going to put on my inspect tool so I can get the crosshairs here. All right, so first of all, where are the areas of support and resistance? So here is a very strong level of prior resistance. It lined up with the 200-day EMA. We got the breakout there. We have a new silver cross in the making, hasn't happened yet. PMO rising, RSI positive. This is a pretty deep decline. And this is what I was talking about with biotechs, renewable energy. This is what you're in for. It's hard to set a stop on a biotech and on a renewable energy solar stock because they are so volatile. I mean, I don't like to set stops much more than, 7% at most, 7 to 8%. And in one day, my stop would have probably been hit. So that's something to keep in mind with these. So it does look good. It's holding the support level and everything here is doing what it really should be, except the group itself is just not really performing that well. Half of your stocks move, and we say this often, half of your stocks move is related to what the sector is doing and what its industry group is doing, half of the influence on its price. So you really want to find those sectors and industry groups where you're getting that outperformance. We already know healthcare is underperforming, and we know from this that biotechs are underperforming. And these are very volatile. So while this chart looks positive, it fills all of the squares for me as far as my indicators. I'm not happy with the relative strength here, and I probably would not get involved, partly because of the volatility. But if from here it were to challenge this resistance up there, that's a 32% move. So I get it, but you really have to have a strong stomach or a really small position when you're getting involved in something like this. But the indicators look good. I just am not a relative strength fan here.
Yeah, put up a dollar SPX. We have a question here that it's very close to Golden Cross. Now he's referring to
Simple
moving average.
So we can change that over.
Up in the overlays.
There we go. So we're going to make this simple. So 5,200. Yes. So there's the red is the 50 and the green is the 200. So we are getting close to that golden cross as far as the simple moving averages.
And we use the exponential moving averages because they are weighted towards most recent price movement. On a 200-day moving average, in my estimation, what happened 200 days ago should not have a massive effect on what the moving average does today. And that can happen. Whereas, as I say, exponential is weighted towards the most recent price action. What happened in the past is already baked in, and it doesn't really come into play beyond it being already baked in. Mm-hmm. It's pretty close right now anyway. Doesn't look the same, but it's getting there, but it's still far enough apart. It takes some time to get the 50 moving up above the 200.
Yeah, and unlike a exponential moving average, if price gets above the simple moving average, it doesn't necessarily mean that moving average is going to move higher.
Right,
and again, that's part of it.
What happened at the farthest number on the moving average when it drops off.
Mm-hmm. That's exactly right. So yes, it's getting close.
AEHR.
Air test system. Here's a semi. Certainly one of the leaders are starting to be a leader again within its group. So again, there's your groups, relative strength, check. We already know that the technology sector is doing well, check. And we're also finding that this stock is doing well against both the group and against the S&P. So excellent, nice backdrop there. My first thing though is the RSI being very overbought because we have this huge price move of 9%. Looks like we had, gosh, how much was it? On Friday, it was somewhere in the 12, 13% area for when it closed Friday. So this is highly overbought. Now, it could be one of those, winner that keeps on winning. But look at before when the RSI has gotten overbought, and look at what happens to price when the RSI gets overbought. And here it held. The RSI was overbought this whole time, and that was fine. But as soon as things started to peter out here, we ended up with just consolidation. That's great, but not always is that what you're going to get. Here's again, overbought and then a decline. So this one is really extended. I look at this more as a watch list candidate simply because it is so overextended. This one might be really interesting on the pullback. But the problem I think with this one, waiting for the pullback, is that by the time it pulls back, the party might be over for semiconductors. So this certainly is a hold. I mean, I don't know why I wouldn't hold this as it continues straight up, but I kind of think you've missed out on so much of this move. It's just hard to imagine it's going to go up another 15 or 20%.
Yeah, a good entry point would have been when the PMO bottomed.
Yep. And this is one of the things we really love about the PMO is that it really does get you in and out when you need to. And we often will look at 5-minute PMOs to give us that area of where you get in and where you get out. With a 5-minute PMO, it's the same idea. The PMO starts up, positive RSI. That's generally a good entry point. Minute the PMO turns down, usually a good time to get out. So it's useful in all time frames, including a weekly one. And if we look at this one on the weekly chart, you can get it. There we go. Again, super, super overbought here. Certainly everything looks very healthy on the chart, but it's one of those where you got to count on a winner keeping on winning. And I think it will, but this is just so extended. You've really missed it. You've really missed out on a lot here.
COMT.
MT?
T.
P.
No, T.
T.
COMT.
Okay. Tango. There we go. All right. The commodities strategy ETF. We often follow GSG and DBA, which I imagine are very similar to this. I like the look here. We've got kind of a double bottom coming in off of this decline. But overall, it's really a trading range kind of ETF right now. And it's about halfway up its trading range. So that leaves us with how much upside potential? Another 7.5%. They do tend to be kind of slow movers. This is where I would look for a possible downturn if it does really get started. And that's only 9% away. So for me, the upside potential isn't quite there, but it is a safer ETF. Commodities certainly looking as though the inflation, is going to keep them moving higher. And the double bottom, we don't have the breakout yet above the 20. And notice we're getting a filled black candlestick. Those are bearish candlesticks. It tells you that although the bulls got this up above the 200-day EMA, bears were able to pull price down all the way below the open. It's black because it's still above yesterday's or Friday's close, but this is not a good sign. Like I said, kind of in a trading range, maybe as a backup to your portfolio, maybe this is a place you might sit, but I don't like the fact that there's not much upside potential. But as far as the indicators go, it's absolutely positive. These are the things I look for. But price action just makes me a little less excited. Not a lot of upside. And struggling at 200.
Question here. Has the NASDAQ and S&P 500 turned up? I don't really quite understand that. I would say the S&P has. Take a look at, CompQ.
I'm going to put the weekly chart up.
Okay, yeah, the NASDAQ is definitely struggling. It's not doing anywhere near as well as the S&P 500.
No, and
obviously they're both of them are rising from that month-end low.
But this is the issue. We really want to see that
Right.
declining tops broken.
Right.
But
Okay.
I mean, yeah.
Okay. MSMR.
MSMR. Ms. Mister. Okay.
Yuck.
Yeah. I mean, I'll just be honest. I don't have really much of an opinion on this one at all, just because of the weird price action. It's just not the kind of stock that I would follow. Let me see if I can make this log scale to make it even a little more interesting.
It's
Yeah, even on a log scale is.
There's no volume on it. I think that's the problem. So
Yeah, it's really thinly traded, very subject to manipulation. Not something like I said, I'm just going to have to say no opinion. It's just not my kind of, the way the action is here. It's just too weird for me.
SLV.
All right. Schlumberger, right? Yes. Okay. Relative strength starting to fade here for the oil equipment and services. I noticed last week, certainly pulling back here for Schlumberger.
Okay.
But it's, yeah.
That was not what that.
Oh, okay.
LV, that Victor, SLV.
Oh, silver. Would love your opinion on silver. I know you actually, you follow a lot of the metals. My first thought is, I don't like it. It's certainly not set up like gold.
It's much more volatile than gold. Try GLD while we're looking at it. But silver's broken down from the consolidation. Gold's looking much better, but still in a consolidation and could possibly pull back. But I don't pay much attention to silver because it is so volatile.
Right. Okay. So yeah, we're now right at support here, but this is a big gap down breakdown out of this consolidation zone. The 5-day EMA getting ready to cross below the 20. I mean, this PMO is headed lower. Stochastics really no help, kind of in a neutral situation, but you can see that relative strength is just falling off. But notice that RSI getting negative as well. So not liking silver here. I mean, I guess you could consider it a short, but yeah, I don't like the look of it here. Breaking from its rising trend, there's just nothing good here.
BAC.
Bank of America. All right. I'm noticing in a lot of these, and it's because the S&P and most of the market look like this across the board, but a lot of these sort of cup with handle shapes, which are bullish patterns. I like the bottom above the PMO's bottom above its signal line, so that's good. RSI positive. Stochastics turning up, but still below 50, which makes me nervous. This is the big problem here is the Bank of America. I mean, if you're going to go for a bank, so first of all, banks are kind of performing in line with the S&P. So this wouldn't be an industry group I'd be fishing from anyway, just based on that. But then look at Bank of America. It's underperforming a group that's barely performing. And so it is now underperforming the market. So just out the gate, because of that, I probably would say, not too thrilled with it. But the PMO and RSI certainly make it interesting. The cup with handle shape makes it interesting. But I just think there are better choices out there. I mean, if I had this, I would likely hold this with a tight stop.
The PE is 10.76, which is undervalued.
So that's a good sign.
Yeah.
But yeah, I'm not a fan of that area of the market, the banks right now, just like I was saying. Looks like they are trying to get some improvement here. I certainly could see this as a buy with the flag formation. I mean, I like it okay. It's not something that gets me excited here, mainly because of that relative strength. But I think price action, the PMO, make it a hold, if nothing else. I don't know that I get involved with it.
Okay, UMC.
And another semiconductor here. Really nice breakout, RSI positive. And again, here's a group that's really outperforming. So even though this one is performing in line with the group, not outperforming the group, because the group is doing well, it's doing well against the S&P. Again, one of the reasons you want those stronger groups, stronger sectors. Like the breakout here, this is a really nice looking stock. We looked at that other semiconductor and it was just hugely overbought. Not the case here. Next level of overhead resistance is right here. So what does that leave us as far as upside potential till the next resistance level? A little over 9.25%. Let's look at the weekly chart. Is there more upside potential here that I'm missing out on? No, that is kind of the next level. Past that, it could make it to this area of resistance. You can see those tops, these lows. So if it gets to that level and we can get it up just a little more higher to the next level, that's a 14% gain. So possible reverse head and shoulders here on the weekly chart. Weekly PMO almost in positive territory. Scooter now in what I call the hot zone above 70. So I like it. I think it looks pretty good.
Okay. MORN, Morn.
Morn.
And
Morn.
M.
Early in the morn.
Yes.
All right, another sort of cup with handle. Like I said, we're going to see a lot of this because the market in general did this. Let's see, it's in comm services, it's in publishing, which didn't look quite as exciting as some of those groups, other groups, but doing well nonetheless. Has come back to the 200-day EMA bouncing off that support level. I like that. RSI positive, PMO rising. This is a nice look for stochastics. You really want to have them staying above 80. It's a little counterintuitive, and I had to learn this about stochastics. Overbought isn't a problem for the stochastics. You actually want them overbought. You want them to stay above 80 because when they're staying up here in the positive above 50, up in this overbought, if you will, area, that's when these stocks tend to be doing well. So the fact that it's turning up above 80 is a good sign to me. Looks like the group is still sort of not doing great. And, you know, the stock isn't not a great relative performer in the last week, but it's looking pretty good right now. I mean, I have to say, I like the price action. I like that it's holding above the 200. You do have overhead resistance coming up pretty quick in the very short term. That's about 3.25%. And up here, which is the strongest level, is about 6.8%. So your upside potential might be a little bit
10 seconds.
10 seconds. All right. Well, let's just stop the share. Hopefully we got through a lot of those symbol requests. I know that they come up a lot. Thank you, Fred, for monitoring the chat room for us. Thank you all of you for joining us today. Go check out our website, DecisionPoint.com, if you want to get more information on what we do. And that's all I have for you. So Carl and I wish you good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.